Automakers have been ramping up production this year, and that's got new vehicle lots filling up. But will this prompt dealers to up incentives to get their inventories moving? Let's bring in Phil LeBeau for more on this. Phil.
Melissa, we are at a bit of a crossroads for the auto industry as they edge back towards normal, and normal being pre-pandemic, pre-supply chain chip shortages. And let me show you those numbers again that you just showed. The inventory of new vehicles, and we're talking about retail new vehicles, what we see at dealerships, it's 41 days supply, up 49% compared to July when it hit its low point of 26 days supply, according to J.D. Power. And from their perspective, a normal market would be 60 to 70 days supply. At the same time, look at this chart. This says it all in terms of what people are paying at the dealership. Average transaction price, it did pull back a little bit in February. We'll see what we get for March, but it's still pretty darn close to an all-time high at just under $49,000. The incentive, meanwhile, has moved up. Highest level it's been in a year, up to $1,474 per vehicle, which creates an interesting situation for the automakers. And we're talking about GM, Ford, Toyota, the guys who are still building a lot of internal combustion engine vehicles and sending them out to the dealers or selling them to the dealers who then sell them to you and I. What happens if we continue to see this inventory move higher? This is an industry with a bad track record of showing discipline, because all it takes is one or two automakers to say, keep pumping, keep moving the metal, and then you see the incentives move higher. For the auto dealers, it's an interesting time. They still have fairly limited inventory, but that is expected to change this summer. Melissa, I'll be curious to see what happens as we move through the next couple of months for the traditional automakers, because 2 years ago, nobody was talking about inventory. You know what they were talking about? EV investment. We're going to be in EVs by 25, 26. This is the money we'll be making. That's still an important story, but you can't forget the legacy business.